one and all to the future of news. Bitcoin is here now when the dollar is through. Start stacking those sats and make it habitual. We all deserve to be sovereign individuals. Time to hear from Sean and get our fix of the day. Get on the standard now because
this is the way.
We were meant for this moment since the day we were born. Now sit back and enjoy. It's good day, Bitcoin.
Good morning. Joining us today is Scott Phillips, the Chief Investment Officer for the Motley Fool. Now, Scott and I, we got into a bit of a debate on Twitter the other day about what is better, cash or Bitcoin, and what to hold in a portfolio for the next 2 years. Scott does not hold any Bitcoin, and I believe that is a train wreck waiting to happen. But before we get into the Bitcoin debate, Scott, I want to get a temperature check from where we are in Australia and the world economically. We have the US elections coming up. There's a housing bubble in Australia, massive amounts of inflation and a cost of living crisis. But Scott, happy Friday, mate. Welcome to the show. How are you this morning?
Thanks, Sean. You say we're doing it tough as a happy Friday. It's a bit like that, isn't it? We've got to keep our heads down and not think too much about the biggest issues we've got, or if we do, maybe try and keep them in perspective. I'm very well. Thanks for having me. It was a fun chat on Twitter, mate. We're going to have a fun chat, I'm sure, this morning too.
Yeah. Hey, I think, especially on a Bitcoin standard, mate, it's very easy to be optimistic 24/7. It is number go up technology, but we'll get into that. First, the Australian dollar, very often I call this the Pacific peso. I stole that one from Daz, author of Beers for Bitcoin. But the purchasing power of one Australian dollar from 1966 to 2020 has just gone down and to the right. Obviously, everyone's felt inflation the last couple of years. Just the dollar's not going as far as what it used to. I guess inflation sort of comes into the conversation, but why is the Australian dollar so weak, Scott?
Yeah, well, it's all inflation, right? Particularly if you're talking about purchasing power. If we don't compare other currencies, then we've got some international differences to think about. But if it's a direct, if it's just Australia versus our purchasing power, it's all inflation. I'm old enough to remember. You can tell I got a little bit less hair than I used to have. I remember $4 schooners. I remember $1, bread and milk. I remember 80-cent petrol. These things are not new, not unexpected, not surprising. Whether they should happen is a very good question. I'm sure we'll get into it. But I mean, that's the fundamental question. Cash is an eroding asset value-wise, or purchasing power-wise, we should really say. I know you guys talk a lot about that, so I'm not telling your audience anything you don't know or they don't know. But that's kind of where we're at, right? When there is inflation, you are eroding your purchasing power every single effectively day, but week, month, year, over time, and so you should expect that line to be exactly what it is. It's reverse compounding. If you draw compound at growth, then you get a reverse curve. The reality is going to be that will remain the same. And if we're talking in 5, 10, 20 years time, that graph will be further down and further to the right, short of deflation, which is really unlikely. So it's kind of not. I'll say it's not a surprise now. Again, a lot of viewers are yelling at the computer right now and saying, well, it shouldn't happen and it should be this, it should be that. That's a conversation we get into, but the maths is the maths. Anyone who knows what inflation is knows that it will happen. It will continue to happen. It'd be a massive shock if it didn't. And so that's why we've had eroding purchasing power over time.
Yep. Yeah, I agree. So Anthony Albanese, the Prime Minister of Australia, often points like the cost of living or inflation from like Woolworths, Coles, they're price gouging, but then you've got the RBA saying Anthony Albanese, the government just in general needs to stop this reckless amounts of spending that's going on. I guess you've been in the markets a lot longer than I. You live and breathe this stuff every day, Scott. In Australia, who is responsible for inflation? Where has it come from over the last 4 years? And why are we where we are now? Like the dollar's lost about 50% of its purchasing power in 4 years, which is hectic.
So I'm going to take half a step back, actually, Sean, and make sure I come back to the full question you asked, because I do want to cover it. When we look at purchasing power, you've also got to look at your earnings power as well. Purchasing power really is a function of the denominator. So if we're talking about a dollar, literally dollar coin, or again, I'm old enough to remember dollar notes. That's a different question. Real purchasing power comes down to wages or income, and that can include interest, for example. It can include dividends. It can include just growth in labor, wage, salaries, that kind of stuff. And that's a slightly different picture. So if prices go up at or below the rate of wages going up, our purchasing power actually improves per hour worked. Now, if you only got cash in the bank and you're earning no interest, that's a different thing. So you do need to look at the real return, not just the nominal purchasing power, the same as you shouldn't look at nominal prices in the same way. So it's a different framing. We do need to make sure we look at that, not just the piece of metal or the piece of plastic these days, or a piece of paper in the old days. So that's important. In terms of the last 4 years in inflation, there's really three things that have gone on, mate. We know that there was a massive supply shock from COVID. Actually, I'll say four things: massive supply shock from COVID and the war in Ukraine. Those combination of factors at the same time. We've seen, if you look at the price of container shipping, for example, it's a wonderful proxy for what happened to the supply chain around the world, what happened to shortages. When you have shortages and no change in demand, you see prices go up. And so that was a massive, and by the way, happened roughly at the same time, right? Really, really crappy timing. Once in a century pandemic, plus you add on, the wheat, oil, general geopolitical tensions out of Russia and Ukraine. You roll that together with a state of uncertainty and fear. It's a really, really crappy starting point. So let's go with that as the first two. The second or third one, I should say, is effectively money printing, monetary easing, call it what you want. In response to COVID, central banks and governments, I'll get the other government bit in a minute, central banks and governments flooded the country and the world economy with money to try and keep things afloat, keep confidence, keep economic momentum, keep people in jobs, keep businesses afloat. The response was, let's flood the thing with money. Let's see what we can do to basically avoid. Remember, Treasury said it'd be 15% unemployment. Houses might fall by a third. That would be Great Depression type stuff. So in the midst of that, they flooded the country and the world with money. The last one, and this goes back to your original point about the RBA and Anthony Albanese, governments around the world, and frankly, we're some of the least worst, which sounds good in one sense, but there's no point being the healthiest man in the hospital. You want to be out of the hospital, right? The least sick bloke is still sick. But we have a structural budget deficit, now not a headline deficit, but a structural deficit, where we're spending too much money in the good times and even more money in the bad times. And so we're making things worse over time. We're growing the national debt. We have a budget that is simply designed to stimulate the economy, to add activity at a time when the Reserve Bank's trying to pull it away. So you've got by the way, the after effects of the money printing are almost gone, which is why we're seeing on a year-on-year basis, not versus 4 years ago, but year-on-year, that's why the inflation rate's coming down, because we're not priming the pump further. But the government is doing way too little to actually address it. And if you believe, and as I do, that a budget should be structurally balanced through the cycle, and we can get a bit more detail on that if you want me to, but if we believe it should be structurally balanced over the cycle, we should have about $100 billion surplus right now, rather than a small of, I think it's $8 billion, something like that. It's something. It's all funded by iron ore revenues, by the way. So it's not a domestic surplus, it's an international-based surplus. So we've got a domestic deficit, international surplus, and a structural deficit. If we had a $100 billion budget surplus right now, it would have taken almost all of that extra stimulus out of the economy at a time when the RBA wants some help. Rates wouldn't be as high. Frankly, they probably would have already fallen by now. It's all guesswork, but that's my best guess. Unfortunately, the government doesn't want to do the politically difficult thing. The opposition, by the way, is not making any noises either. It's not a partisan view. They're both ignoring fiscal discipline after being, for the 80s and 90s, spending, they're in lockstep. We need fiscal discipline, do the right thing, get the budget back into surplus. Now no one cares because it's politically not popular to do so. And unfortunately, the economy is paying the price, literally, through inflation and interest rates.
Yep. One thing you said, Scott, is that they printed all this money to avoid like a recession or Great Depression.
Yep.
Would it not have been better if we went into a recession or even to the Great Depression, even if it lasted 10 years? Would long term that not have been better for the economy, for people's purchasing power, for the country, and just everything that we enjoy in such a beautiful place?
So I don't think we know. I think it's really important to be intellectually honest about this. We don't know what the counterfactual is, right? We don't know how bad it would have been, what would have caused, how long it would have taken. We have one example of the Great Depression in the 30s. We have the GFC and what the Yanks call the Great Recession through 8, 9. So we don't know the answer. We don't know how bad it would have been. I suspect there's two schools of thought here. One is that from a purely economic system, academic kind of focus, academics, but to look at just the theory of the thing, possibly yes. That being said, I think it's very, very hard for me to sit here and say, you know what, we should have 11% higher unemployment because I would have felt better and things would have been fixed better. We should have had a lower budget deficit because I would have felt better and things would have been fixed easier. 30% fall in house prices, people would have lost their homes. But, at least we would have made things better. I think sometimes messy and long beats but it's very ugly, painful, and short. And I think, if it lasted 10 years, how many people are out of work for 10 years? What does it do to the economy for that 10-year period? I'm not sure, mate, to be honest. And this is the problem with the counterfactual is I also would have done things differently in between that, right? So there's not just what the government did and doing nothing. There is what the government could have done, what they could be doing now, and then nothing. And so there's kind of that point in between. So I really struggle to say the government should let people lose their jobs, businesses fold, houses fall. I don't think that would have been a good social outcome, even if it would have been a cleaner economic outcome. And I know the drive for kind of simplicity and that kind of systemic beauty is a really kind of it's a really attractive idea. But I think if you consider the human cost of what that would have done, I don't think we should have done nothing. No, I think the government did it roughly right. Now, big asterisk there. Sorry, this is a long answer. I said at the time, my view was, and it remains, they should have gone big, fast, and ugly, and that's what they did. Because they had to restore and maintain confidence. That was the lesson from the GFC, and frankly, it was a lesson from the Great Depression, right? Once that cycle starts, it continues. So they got it roughly right and also pretty wrong, but they had to do it fast and big. After that, they gave too much money to too many people with too few criteria. They printed too much money. What they should have done is calibrated more quickly. And then most importantly, mate, what they didn't do, I've never been able to find this stat again. One country actually started repaying its COVID debt even while the pandemic continued, because they'd gone through the worst of it, got back to normal, and said, great, let's pay off the credit card, and started to pay that credit card down, right? The Australian economy, most global economies went, this is crap, let's throw a lot of money at it. Okay, it's getting a bit better, keep throwing money. It's getting a bit better, keep throwing money. Oh, thank goodness it's over. Don't worry about getting the money back again. And so the natural stabilizers, I mentioned structural balance, the natural stabilizers should have said, great, hey, companies, we gave you some extra cash. We'd like some of that back, please. Whether it was directly back or whether it was a short-term increase in company tax rates or income tax rates, to say, we threw all this money at you. You're welcome. By the way, it's our money. So the government took on debt to do it. We got to get back to square. The fridge blew up. We replaced the fridge. We put it on the credit card. Kids, sorry, you're not having dinner out at the restaurant. We'll have fish and chips on Friday night instead, because we've got to pay a bit back off the credit card to make sure we get back in a reasonable position. That process of getting things back to normal more quickly is what I think sits between the two of what they did and doing nothing, which would have given us a much, much, much better outcome had they had the smarts, political discipline, guts, leadership, call it what you want, to actually start making things better. And this is the previous government. The current government's done exactly none of that. They got a nice surplus. They spent 3/4 of the extra money they didn't expect to receive. So this is a ignore the impact, keep the party going. I think there's a place in between those two.
Yep. I want to dive into like the government spending. We're just sending a lot of money overseas, but you put out a tweet this morning about tariffs, which I want to dive into. First, I want to dive into the banks, and then we'll get into the cash versus Bitcoin debate. But if I bring this up, this is what Shiguru, Justin, Bank of America warns that gold may be the final safe haven as US Treasuries face risk from rising national debt. So this is sort of related.
Yep.
With like Westpac customers, they're demanding answers as the bank hit with the third online mobile banking outage this week. I think for some people it went on for 3 days. Obviously, just overall, the global financial system is on pretty shaky ground. We also have the misinformation disinformation bill in Australia trying to be pushed through. There was a clause in there which is strange that people like yourself, myself, if the banks look insolvent, we can't say the banks look insolvent. That would be misinformation or disinformation, even if it's factually true. While we still can speak freely about it, what are your thoughts in regards to the banks? And I guess just the money system in general. We've got BRICS potentially coming out with a gold-backed currency. People are losing faith in the US dollar, like the Australian banks are going down. We're being warned there could be more and more cybersecurity attacks. Like, what are your thoughts in regards to banking in general?
So I'm going to be less pessimistic than that. Either because I've drunk the Kool-Aid or because I'm just not
100% you drank the Kool-Aid.
Worried. Not as worried as other people are. There's so much in that, mate. Banks particularly. I think we need to be careful at presuming every bit of potential bad news is fatal. So are we going to have internet banking outages from here for the rest of eternity? Yeah, absolutely. Is it going to suck? Yeah, absolutely. Telstra went down. People couldn't use their FBOS machines for a while, 6 months ago. We got over it, moved on. I do think we need to separate out, in my mind at least, the occasional problems from the terminal ones. It's very easy to kind of layer those things up. Say, see, therefore, it's going to end in tears. I don't think that's necessarily the case. It could, of course, it could. I'm someone who believes very much in maybe and possibly, and I don't know. I'm not an absolutist in almost anything. So, could it be bad? Yes. Do I worry about Westpac's cybersecurity issues? No. Not because it can't happen, because it's not very likely. They'll sort it out if it does, and things will go on. I think that's the lesson of history: is for every crisis, real and imagined, we find a way to get through it, and things get better over time rather than worse. So I'm just not worried about it. Not because it couldn't be consequential. Frankly, there's no point worrying about it in my mind. Secondly, we'll solve for it at the time, or hopefully in advance of that, and kind of get on with it as we've done with every crisis over time thus far. So that's I can't bring myself to be pessimistic about it as entities, as banks as entities. That being said, ANZ almost went broke in the early 1990s, as did Westpac. So I'm not saying individual banks can't fail. They absolutely can. In fact, it's more likely than not that a bank will fail for whatever reason at some point. I don't think it'll be catastrophic when it does. We'll find a way to solve it, as I said. The Yanks had Silicon Valley Bank fail. The Credit Suisse failed. So we found our way through those things. So I think we need to be careful with assuming that those aren't necessarily terminal problems. To gold and to the US financial system, I think they've got some really significant issues. I mentioned the inability or unwillingness of Australian politics to solve for our financial self-discipline issues. The Yanks have got that on steroids. Now, as I said, it's great to be Australia. I'd far rather be Australia than the US, put it that way, particularly in this context. The budget deficit is atrocious. The interest bill is atrocious. They got some really massive issues. And they're going to have to try and work through what that looks like for them, how they deal with that, how they get in front of it. Is gold the solution? I don't know. I don't own any gold, so I would say no. I do own US shares, by the way. I suspect that those US businesses, if I own quality businesses, this is not a pitch, by the way, but why do I own them despite that? Because I think they will preserve and grow my purchasing power over time, despite what might happen in the US. Partly because, by the way, most US companies have as much or more revenue garnered from overseas outside the US than in the US itself. So again, if I think about my investments, I'm not particularly worried about it. I wouldn't want to be holding US bonds. I don't own any bonds. I want to hold US cash. I wouldn't want to bet that there's not some drastic solution in the US in particular to the problems they've got. I'm very glad we're us, not them. I think we should make sure we're absolutely squeaky clean at our end to make sure we don't ever become that. But I'd much rather be us than them. I think that's it. Is that the answer to all your questions you had on that one, or have I missed anything?
No, that's good, Scott. So, you're saying you don't hold any gold. You clearly don't hold any Bitcoin. It seems like you're a very successful investor. Where are you storing those profits? What are you using as a store of value?
So my view as an investor is this gets into the very shares versus Bitcoin thing right up, right? So I'll outline it. Then you can take us away and bring us back if you want. As an investor, my approach is that I want to grow my purchasing power, grow my wealth, call it what you want, at a rate faster than inflation, obviously, because otherwise you're going backwards. But more than that, I want to maximize my returns over the long term. And so I look around and say, right, of all the asset choices I've got, where do I feel most comfortable putting those chips down? Where do I think I can generate sufficient returns with a probability of success based on what I know? And so as old-fashioned as I am, I'm a Warren Buffett fan from way back. I'm looking for cash flows and growth as evidence of a likely growth in value. So if I look at I don't own these shares, so I'll use it as an example. If you look, I haven't talked about what I do own, by the way, but I'll use another example. So I'm not pitching. If I use Woolworths, for example. I think Woolworths are going to sell more baked beans in a year's time, 3 years' time, and 5 years' time. I think they'll find a way to be more profitable over that period of time. And if I think they'll be more profitable about 5% a year, I can kind of roughly work out what sort of level of profit they should be doing in 5 years' time. And I can work out what a decent price to pay is for that. So I can, if I'm right, earn a return of whatever I'm looking for. And generally low double digits a year is kind of a pretty reasonable investment goal to have. Plus or minus is a pretty good result compounded. So that's kind of what I'm doing. Why don't I own gold? And this has parallels with Bitcoin, frankly, because gold doesn't produce anything. I can't value the gold. I can speculate about what people might want to pay for gold in the future, how much might be found, or I will say mined for the fun of it, just because it's a nice correlation. But I don't have a way of estimating how much people will pay for that. Now, I can't promise you what people pay for Woolies either, but I know that if Woolies A spits out some dividends and B is more profitable, there's very good justification if I've paid a decent price for other people to pay me a better price in 10 years' time, 5 years' time, if the business is more profitable, more successful, and has a brighter future. So that's kind of why shares for me. Why not property? Because I think the growth in shares is more likely to exceed the growth in property over 10, 20, 30 years. Again, I could be wrong. That's the approach. Why not cash? Same reason. Cash, I might get 4 or 5%. Shares, I hope to get 9 or 10%. So why would you invest in an inferior asset if I can get a better return from a different type of asset? So that's kind of my investment approach, capital I investment approach, I suppose, in terms of how I think about quantifying the opportunities that I have in front of me, and then pairing those back based on understandable probabilities in my view of what the future might look like. I don't take flyers on stocks that are, mining explorers or biotech hopefuls either, for exactly the same reason, right? If they're successful, things could go great. Will they be successful? I don't know. I literally just don't know. Until I don't know, I don't do it.
Yeah. Understood. We're going to come back and follow on from this conversation. But before we do, you did put out a post this morning in regards to tariffs. And I thought maybe you're replying to Janet Yellen, just came out, Council on Foreign Relations. I'll play this video, and it's only 1:37. She's talking about tariffs. And I'd just like to get your thoughts on if they're good or bad, if they're effective. But over to you, Janet.
American businesses and families have a
just making sure you can hear that when I was playing.
tremendous amount to gain from our connections to the global economy and from U.S. global economic leadership. We need to promote policies, investments, and institutions that support global growth, protect financial stability, and avoid economic instability. This includes tackling challenges like climate change, pandemics, and conflict and fragility that threaten to hold back global growth and that will be high on the agenda at next week's meetings. Calls for walling America off with high tariffs on friends and competitors alike, or by treating even our closest allies as transactional partners, are deeply misguided. Sweeping, untargeted tariffs would raise prices for American families and make our businesses less competitive. And we cannot even hope to advance our economic and security interests, such as opposing Russia's illegal invasion of Ukraine, if we go it alone. But the issues we face today, from broken supply chains to climate change and global pandemic preparedness, to China's industrial overcapacity, also mean we cannot simply draw from an old playbook.
All right, so that's Janet Yellen. Sound like she's against tariffs, which is probably not a bad thing. Trump's been talking about imposing tariffs on anyone that's walking away from the US dollar. What are your thoughts about tariffs in general? Are they effective? Do they help the population that they're purported to serve?
Tariffs are atrociously bad. I can't be. I said I wasn't absolutist on many things. I'm absolutely absolutist on tariffs, mate. Here's the, and look, I get why people are in favor of them, right? Because it feels like we're protecting us against them. And there's a real tribal reality of that sort of stuff, right? The one thing I hope most of your audience, being a global money, Bitcoin, know is that we've got to be really careful about the us versus them thing. And here's the thing. We bought overpriced Holdens and Fords and overpriced BMWs and Mercedes and Kias and Hyundais for years because we had subsidies on Australian cars. So what that meant was the Australian cars cost more than they should have, and the international cars cost more than they should have. So we all paid more for cars for decades to protect 25, 40, 35, 40,000 jobs. We created 64,000 jobs last month alone in the Australian economy. That number came out yesterday. And so we're paying, I don't know what the number would have been. It would have been probably billions, hundreds of millions at least in tariffs for effectively the protection of a very small number of jobs. And we should protect those people, right? But the jobs themselves, the jobs they do, shouldn't be protected at the cost of the rest of us over time. Take it the other way. Now the tariffs are gone. We've lost the car industry. That sucks. I loved watching Bathurst when the Holdens and when the Commodores and Falcons were racing around the mountain. I used to love it when I was a kid. So I'm sad that we don't have Australian cars anymore. It just makes me sad. But we've now got cheaper cars. We are better off because we're buying better cars for less, which means more money in our pockets, which means, guess what? We can buy more other things from Australian sellers. By the way, Australians work in the retail of cars. They work in the supply, the fixing of cars. And the fact I've got an extra $2,000, $5,000 tinger in my pocket means I can now go and spend money on a coffee, a t-shirt, whatever you want to buy. So it means more economic activity, right?
Buy some
jerky. Buy some jerky. But like literally, that's what I mean, right? So if you don't have that money, it's like it's another version of inflation. Frankly, when prices go up, we can buy less stuff, and that's like the same amount of money. A tariff is effectively an inflation. Here's the other thing: people say, well, should we combat other countries' subsidies? Why would you do that? If China's government wants to pay their solar panel manufacturers to make cheap panels, and we get to buy them cheaper, we win twice. Not only are we not putting a tariff on them, we're getting advantage of the Chinese government's subsidy. So buying a panel for a couple $100 less than it otherwise would cost, we're better off. We're winning from their subsidy. It's great, right? And yet we somehow see this national interest problem. And the argument goes, well, hang on, it's costing Australians jobs, which would be true if our unemployment rate wasn't 4.1% today and the participation rate higher than it ever was. So we've got lots of problems in Australia, but import protection is not one of them. We should be careful about dumping. It's kind of the phrase or the word that economists use to talk about if we had a vibrant, solar panel industry, right? Let's say we exported them to the world, and all of a sudden the Chinese government put a massive subsidy on the ones that were just imported into Australia, try and kill our industry. That's a very different thing. So that's an entirely different question. But unless there is cases of genuine, not just pretend because it helps to make a case, genuine dumping, you may choose to put a tariff on that to stop it happening. But the reality is we're all better off right around the world and in Australia without tariffs because we're buying cheaper. We're more incentivized to produce more competitively. We do the things we're good at rather than things we're bad at, but we can do because there's a tariff in place.
Yeah, cool. I want to dive into cash first, Bitcoin, but a couple of rapid fire questions. With those jobs, do we know the split between like private and public sector? Like, was it just all government created jobs?
Most of them probably are. We don't know the split formally. I haven't seen it. I've been asked that before, and I haven't seen it for a while. The rise in healthcare jobs is massive. Probably not government jobs directly, but probably a very fair chunk in NDIS, for example, which is government funded but privately provided. So the definition of public and private gets a little bit messy at some point. The growth in healthcare jobs, the NDIS is a debacle of a structure. We need to look after people with disability. The NDIS is a disgrace as a structure. It was always a terrible idea. Three cornered markets never ever work. The payer, the recipient and the provider are three different people. It's always a recipe for disaster, and that's exactly what's happened. But yes, honestly, mate, it's probable that government spending, not government jobs as in public service necessarily, but government spending is creating those jobs. So you're absolutely right. Again, in the context of the RBA probably keeping rates higher because the labour market's stronger, another example of the government kind of working at cross purposes to the Reserve Bank.
Yeah, that's going to be my next rapid fire question. What's going on with rates here in Australia? Like, why haven't they come down? Most of the world started cutting, and do you expect that we do get a cut maybe early 2025, or sort of what's the outlook in regards to rates, and why have they been so high for so long?
So,
and is that bad?
So that's a whole different question. So I don't do predictions, mate. I am very lucky to work for the Motley Fool. Most people in my role have to have a forecast because their clients expect it and they pretend they know. There's a great John Maynard Keynes line that some of your viewers might have heard. Pundits forecast not because they know, but because they're asked. And so I just simply say I don't know. What I will say is, why are rates higher here? Because inflation's higher here. US inflation 2.5%, UK's 1.7%, New Zealand's come down recently. The number escapes me. Our inflation, underlying inflation, is still 3.4%. It's literally double UK inflation right now, and so that's why we talk about inflation and purchasing power. We're back to where we started. The RBA shouldn't, in my view, it may still, but it shouldn't reduce interest rates. Unfortunately, now watching paying a mortgage is just throwing rocks at me right now. But the reality is, the interest rates are a function of inflation. Effectively, they're there because inflation is too high. That's why they haven't come down yet. The RBA will drop rates before inflation comes down. They will look at the glide path, as they call it, and say, well, we think it will be down by whenever. And if that's soon enough, it's going to happen anyway. It's going to happen soon enough anyway. They may start cutting rates. So there's an outside chance they do in November, mate, because they look at this and go, the rest of the world's coming down. We'll probably come down too. Let's cut rates and start that process. I hope they don't, because I don't want them to have done all this work and cause all this pain and then take the foot off the throat. And the boxer gets back up and you think, well, now what do we do? So I kind of hope not that I want people to pay mortgage pain, but I really want to make sure we finish the job. I suspect the most likely outcome, not a prediction, is Feb March next year. I wouldn't rule out November if the pressure of the economy more broadly and a bit of optimism, a bit of wishful thinking of, hey, the US is good, UK is good, we'll be good soon too. We can afford to cut rates. If they do, that'll be, I think, why they do it.
Yeah. I think when they cut rates, like everyone's calling for it, everyone thinks it's a good deal, but I think we're just going to reignite inflation and just go into another massive melt up. I think.
And house prices too, by the way.
100%. Everything's going to get more expensive for everyone. But let's transition, Scott, over to Michael Saylor. I've bought a bit of backup this morning here. So cash versus Bitcoin. The conversation that you and I had, you're saying over a 2-year period, you should be holding cash. Over a longer period, like 5, 10, 15 years, maybe I'm butchering those dates.
That's right.
You can go into stocks. But in a way, I sort of agree with you. However, I agree with Michael Saylor more and what he says. So I'll play this first, and then we'll get into a bit of a rip if you're comfortable.
Yeah, go for it.
What do you do with the Bitcoin besides it just gather value?
Well, the real estate developers in New York City, they're not buying the real estate because they want to live in it. They're buying the real estate because they expect
because they want to sell it eventually, desirable. Michael. I mean, let's be honest. Most of the people who are, yes, sure, some people pass it on to their children, but like most of the people who are buying assets at some point want to sell the assets at a profit. So let
me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay. Anybody that
So that's exactly what I think, Scott. People holding cash, we call them poor. Obviously, we talked about inflation, we talked about rates, the manipulation of the currency that's going on. It's lost a hell of a lot of purchasing power since 1966. So this is where the conversation started. You reckon people should, over a 2-year time frame, hold cash? Business owner, we've got 2.5 years of cash for our fixed costs. Like we've got a bit of a runway, a bit of a buffer. For my own personal thing, I keep very little cash. Pay myself from the business and I just put it into Bitcoin. I think it's a better store of value, but I'm not looking at a 2-year time frame. I'm looking at 4 years minimum, and then I'm looking 10 years out. So I can sort of agree with you on the 2 years, but like, what are your thoughts in regards to that statement that you made of if you've aiming to invest for 2 years, just hold cash? Where'd that thesis come from?
Yeah, it's a really good question, man. And thanks for setting up nicely. By the way, I'm saying cash versus shares. I am 99.something% invested in shares, right? I have very little cash as well. The cash is there to be put into shares at some point. If I've got cash, it's because I haven't invested it yet. So I'm actually with you because I'm a long-term investor too. And the 2 year, it was really important, the 2 year period, right? And I want to be really clear about this. I'm not saying over the next 2 years, cash will do better than shares or Bitcoin or anything else. What I'm saying is if you have a 2-year investment horizon, which is, what's today, the 18th of October. If I want my money, if I got to get my capital out in whatever form on the 18th of October, 2026, presumably I have a 2-year time horizon because I want the money at that point for a purpose. Buying a car, house deposit, retirement, for whatever reason, you've got a 2-year time horizon. I think, and this is the thing, right? I don't think you should invest anything for 2 years because asset prices are volatile. Houses, shares, Bitcoin, art, gold, pick your asset. Over 2 years, I have no idea because sentiment rules in the short term, value rules in the long term. The same is true of Bitcoin. If I'm wrong about Bitcoin, that's cool. It will be proven over the long term. If someone says to me, between now and 2026, look, I told you Bitcoin was going to go up. I said, well, sure. Maybe shares go up. Maybe they don't go down. Maybe property goes up. Maybe it goes down. So if you need the money on 18th of October, 2026, you in theory need it at a fixed amount. If I got $100 now and I get to October 2026 and I got $80 left because I invested it and it went down, I probably wanted the $100. And it would have been better to make sure I had at least that $100 at that point in time. And so when I say cash, I don't literally mean cash is in under the mattress. I mean, in a high interest savings account or a term deposit or something. So it should roughly match inflation or thereabouts, close enough. But if I'm doing 2 years, it's because I need the money at that point. I don't think anybody should invest in any asset that has a volatile price over that period of time. Now, if you've got more than a 2-year time horizon, then we're not talking about you. I don't mean you personally. I mean anyone listening or watching, right?
Yeah.
If you're saying, I've got a 5-year horizon, cool, I'm talking about you. I'm only talking about the people who are saying, where should I invest my money that I need in 2 years' time? And my answer is really, really, really clear. If you need the money in 2 years' time, you need at least what you've got now, hopefully a little bit more, but definitely no less, because that's the only horizon you've got. You don't have the choice of saying, oh, I'll let it ride for another 3 years. If that's true, you've got a 5-year investment horizon, not a 2-year horizon. So it's really, really important we get our terms right. But that's why I'm a shares guy. I think people should invest in shares for the long term. I think they'll do fantastic well over the long term. If you need it in 2 years, sell your shares now, go to cash, because at least you know what you've got at that point in 2 years' time.
Yeah, interesting. I've got a video here of Larry Fink. If I can find it, I'll just bring it up. He's turned into Bitcoin's marketing manager, which is quite interesting. The probably like out of world superpowers, there's the US government, there's the Chinese government, then there's BlackRock. So as an individual, he's pretty bloody powerful. And he has come out now in favor of Bitcoin. This is what he has to say. And we're going to switch between Bitcoin and cash, and the conversation will come to a conclusion shortly.
Definitely. I can't see that video, I have to say, Sean. I've just seen a still of the Michael Saylor video, so I'm not sure what else is going on the stream.
Oh, sorry. Let me. Let's bring Mr. Fink back. I was in my own private little party.
Good stuff.
Digitizing gold in many ways. It's a instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country, or the devaluation of your currency, whatever country you're in. Let's be clear, Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative.
All right, so where I'm going with that, Scott, and AMP's BTC sort of ties into this as well, is Bitcoin is a new asset class. In like judging over the last 10 years, it's gone up about 40% compounded annual return. And then AMP BTC, problem is this talking about leaving cash in a bank for 2 years. If you put in $100, it has about $90 worth of purchasing power in 2 years. The reason I guess he's saying that is because, yes, you are getting an interest rate, but the interest rate's well below what inflation actually is, what real inflation that people are experiencing. So having a 2-year time frame, if people are just putting in cash, they're actually still losing purchasing power and may not achieve their goals anyway. Does it not make sense to maybe bring in a little bit of risk, whether it's like 1%, 3%, or 5% to your portfolio, to be able to hedge against that? Because if you're losing 10% anyway, if you lose another 1%, 3%, or 5%, does it really matter if you've got like the chance of a 40% annual compounded growth rate?
So I've just pulled up, mate, for the absolute fun of it. Westpac's term deposit rate is just the first Google response I got, right? So I'm going to quickly pull it up. I can invest for 24 months at 4% per annum. I would bet over the next 2 years, inflation is less than 4% per annum. So that's a bet, that's a gamble, that's a risk. I would again, because I want to, let's say it's 5, right? I might have $98 in real purchasing power at the end of that, rather than 100. But at least I'm not going to have 97 or 95 or 90 or 80 or 83. I could have 120 or 140 if Bitcoin does do 40% a year, for 40% a year, be double that by then. So it's possible, absolutely. It's also possible Bitcoin halves, that Woolworths shares halve, that the market crashes 40% as it did in a month during COVID. And so that's just here's the other thing, by the way, in terms of think about shares, right? If I invested today and in 23 months' time, we have another COVID-style fall, I lose 40% of my money, and then I'm locked into taking that money out the end of October 2026, and I go, well, bugger. Now I've got to take out what might be $70 by then. Allowing for inflation, maybe at 65. That sucks, right? So why would I do it? And a 135% doesn't move the dial either way, right? If it's up, you're up. If it's down, you're still down. There's just no need over that time period. This is financial advice rather than asset prediction. And that's why it's a little bit different, right? So financial advice is not necessarily what assets could do well or what could do badly. There's upside and downside on both. You want to lock in your purchasing power. If I could get 4% for 24 months, according to Westpac, I would bet that roughly matches, probably slightly beats, maybe slightly is behind inflation, but by such a little amount that my $100, if it's $98 or $102 in real purchasing power, I've not got I'm not saying any risk at all, or very, very, very small risk of any loss whatsoever, because I need the $100 back. Any asset that has a volatile price, I'm taking far more risk. And again, if you've got a 2-year horizon, as I said, it's because you need $100 in 2 years, not because you want to see what you can maximize in 2 years. If that's the case, again, very different story, but that's kind of speculation over that time frame, because even Bitcoin could be lower. Woolworths shares could be lower. Art, gold, property could be lower in 2 years than it is today. You just don't know. And that's, for me, a financial advice rather than asset prediction is, what is your objective and goal? It's to have that money in 2 years' time. What is my best chance of having that money in 2 years' time? It's in the bank at a inflation probably beating, maybe matching, very, very slight chance of lagging interest rate, over that time.
Yeah. And to be fair, I do agree, especially like for a company or for specific goals for advice, I guess, and I can't provide financial advice. But yeah, as a prediction, I dare say over the next 2 years, Bitcoin's going to go to the moon, as they say. But we can dive into that. First off, have you read the book, The Bitcoin Standard?
I have not, no.
A little bit of homework. It was written by Austrian economist Saifdina Moose. It was forwarded by Michael Saylor. It's like the gold standard of Bitcoin. I've handed so many of these books out, Scott, about 30 of them, and people give it back to me. And they'll go like this, and they'll be like, it's just too much. It's just too much. It is a lesson in Austrian economics there. But I think for someone like yourself, you'll be able to go through it. You'll be able to read in a week. For anyone else out there, Beers for Bitcoin by Dasby and Seb Bunny, it's like a 4-hour read. So like that's the quick version. But I think someone for yourself would truly benefit from reading the Bitcoin Standard. It's the Bitcoin's most famous book. But I guess why haven't you taken the leap into Bitcoin yet? You've obviously seen it's the best performing asset in all of human history. It's now brought in $20 billion. It's been the most successful ETF in human history over that time period. The best capital allocator in the world, Larry Fink, is really pushing it, promoting it, saying it's a new asset class. Is something that you need to pay attention to. I guess for yourself, and then maybe even for the Motley Fool, why aren't you paying attention to Bitcoin?
Yeah. So paying attention very clearly. So there's differences between paying attention and actually investing. And I think, trying to work out how to frame this properly. I talked about shares before in terms of the way I think about my investment process. And so my starting point is, what do I think this is worth today? And why is it going to be worth meaningfully more tomorrow? And what's a reasonable probability of upside and downside, and how that nets out? And the easiest up to now, or up to whatever point in the past you want to talk about Bitcoin becoming mainstream, was the same as the reason I don't own gold. Okay, and I've mentioned before about why I don't own gold. So I just can't with any reasonable investment system. Probably the best word. I mean, system like as a black box thing. I just mean there's no way to estimate the future value of gold based on knowable information. Now, the future is always unknowable, right? So I'm not pretending that shares or art or property can be done. You know, how's property going to go up next year? I got no idea either. So there's no easy way to say, look at gold and say, what's gold going to be worth in 5 or 10 years' time? I don't know. Literally no idea, right? And so the same is true of Bitcoin. I just don't know. So the starting point is, for me to have an investable asset, it's a reasonable estimation of future cash flows and therefore future value. And if an asset doesn't produce a cash flow, I find it very, very difficult to own, or is likely to produce cash flow, I find it very difficult to own. That's my own investment kind of thesis and system, right? And so that's kind of where it starts, is simply a case of it doesn't produce anything. No profits, no dividends, no cash flows, no interest, no rent, no whatever. What's it worth? Don't know. So that's honestly the real starting point, because on that basis, you are relying on, I'm going to say greater fool theory, and that feels like I'm being rude about it. I'm absolutely not. So I don't mean greater fools in order to buy Bitcoin's a fool. I want to be really careful about how my words are interpreted. But as people understand the greater fool theory, you're doing it because you expect someone to buy it from you for more in future. If I don't get, I don't know Woolworths shares, if no one pays me more for Woolies in future, but profits keep growing and the dividends keep growing, I'm getting a cash flow from that, and I'm seeing a business that I think is worth more because the profits are growing. So I can, even if someone's not going to pay me for it right now because the price is in the toilet because sentiment's poor. Again, on our time frames we talked about before, and I'm glad you did it in that order. I'll say, well, I'm so happy to own Woolworths. It's a bigger business, a more profitable business, a more valuable business. I'm not offered more for it, but it's more valuable. So I'll happily own that for an extended period of time until I give up on the future of the business. Oh, gee, growth's gone nowhere. It's going backwards. Or, man, someone's paying me $100 for Woolies shares that are currently $40. Of course, I'll take their money. That's stupid money. I'll take it. So it's the assessment of value that's necessary. And why I don't own gold is why I don't own Bitcoin, which is, by the way, I bought $100 worth of Bitcoin about, I have to look at the numbers, about 7 years ago, maybe, I think, just to follow along. And so I didn't cold storage it. And again, I'll hash the terms up here horribly, no pun intended. I had it with an online brokerage, and it was just literally to kind of just to go through the process of it at the time. I think I might have sold a tiny fraction of one of those online brokerages somewhere. But so I took the money out. It was literally just to go through the process. And by the way, speaking of long-term returns, it is still the highest percentage gain I've made any asset in my life. It was that Bitcoin of $100. So maybe I should have put more in at the time. But it wasn't a conviction purchase. It was just, hey, people are doing this. I've not done it. People are asking me about it. I'll go through the process and just understand what it's like. So that's the reason I want to be really, really clear. I will say in the investment community, people are pro Bitcoin and then see anyone else who's not pro Bitcoin as anti Bitcoin, and that's a horrible generalization, but it tends to be true. I'll be really, really, really clear. I am firmly on the fence on Bitcoin. I am completely agnostic. There is a case for it being worth much more. There is a case for it being worth much less. I just don't know. And my investment approach is simply, if I don't know, I don't buy. I just wait for something else I feel more confident with, that I feel like I have a higher probability of understanding and being right about. And if I get that, that's what I'm looking for. So I've missed lots of stuff. I own shares now, but Fortescue was 2 cents. It's now whatever, the $20. I mean, I missed that entire gain as well. Doesn't mean shares are bad. Doesn't mean I was an idiot for not buying Fortescue. I just went, well, I don't know. And I got to a point where at $15, I went, I think I understand this business now. Did I miss a lot on the upside? Yes, absolutely. I also missed the other mining explorer that went dead broke and lost all of its money because it didn't become successful. So for me, investing is a game of probabilities and levels of confidence in those probabilistic assumptions. And that's kind of how I get to where I am, which is why I buy, why I don't buy. If I hated Bitcoin, I'd short it. I don't know if you can short Bitcoin. I'm sure you can. I'm not doing that because I'm not stupid, right? I don't know where this goes next. So I'm simply just saying I'll watch with interest from the sideline, but I'm not buying because I don't have the degree of confidence required based on the fundamentals of the investment.
Yeah. And I guess, Scott, that's why I reached out to ask you to come on. You do have a big audience and you guys are doing really good things, helping everyday Australians get richer, wealthier, smarter there. But like you're saying, Scott, that $100 was the best percentage gain that you've ever had. So I guess that brings us back to the saying is everyone does get Bitcoin at the price they deserve. And there's another thing that floats around, have fun staying poor for people that don't understand Bitcoin. I guess, again, like I will urge you to read the Bitcoin Standard. It just well worth taking the time. But I guess a couple of the ways, and you sort of framed it, you're not really into property because you can't really value it for the long term. Bitcoin very much.
Can I just very quickly jump in? I just want to clarify that. I'm not into property because I don't think it'll grow as much as shares. I don't think I can reasonably value it, or at least work out what I think it's worth. I think it's overvalued. I don't think it's going to go up as much as shares will. So I'm not avoiding property because I can't value it. I'm avoiding property because I think it's overvalued. That's different to gold, for example, which I don't think I can value. That's just, I don't want to, just so we're really, really clear for your viewers, there's different cases for both those asset classes.
Awesome. That maybe helps my argument a little bit more than this morning. So if we were to relate Bitcoin to private property, it would be very similar. So there's only 21 million Bitcoin that have ever going to be created. If I bring up the block clock here and share this tab instead and bring this up. So this is just a dashboard. It shows where Bitcoin is in time and space. Every 10 minutes, we get a new block. And so we've gone through 866,119. They're about 10 minutes on average, or 9 minutes and 30 seconds over the last 16 years. The price, 67,240. The Satoshis per dollar. So every Bitcoin's made up of 100 million Satoshis. So you don't need to buy a whole Bitcoin. You can buy $1 worth, $5 worth. For every $1 US, you get 1,487 of those sats, Satoshis. Again, every Bitcoin's made up of 100 million. Market cap 1.33. So I bring that up for the reason being, 21 million Bitcoin. Oh, this is what I wanted to bring up. Sorry. Is the supply 9.76 million have been mined out of 21 million, which is 94.13%. I believe 2035, we get to like 99.9% of total mineable supply. So at any time on any day and going back in time, we can see what the supply was. We'll know what the supply will be within like a very small margin of error. Bitcoin was the first time that absolute digital scarcity ever happened as a 0 to 1 event. That happened. All the other shit coins, the scams, the degenerate gambling, XRP, Ethereum, Cardano, everything else, they're just designed to bring people in with greed. For me, they have fundamentally no value. Maybe some of those things with real world assets may be good technology play, but blockchain really is designed to be an open ledger as the invention of triple entry bookkeeping. So there's a couple of things where fundamentally there's a shift, and it's separated money from state. So like with Bitcoin, there's no counterparty risk. Unlike shares, there's no CEO that can crash the Bitcoin price. There's no one that can get in the way. No government can shut it down. They can't stop it. We know exactly what the monetary policy is now and what it'll be in 100 years, 1,000 years, which is good. And then bringing it back to the property. So there's only ever 21 million. There's 66 million millionaires in the world, I believe, roughly thereabouts. So not everyone can even get a whole Bitcoin. So then if you think about scarcity, and people love absolute scarcity, Bitcoin's the scarcest monetary asset, the best form of money that's ever been engineered in all of human history, ever. We're here now, it's only 16 years old. Wouldn't it make sense to start to learn a little bit about it? So say like in Miami's probably not a good, like New York or something like that property, if you bought that when New York was only 16 years old and you'd hold it now, like you rule the world, basically.
Yeah.
Same thing with Bitcoin. It's digital property in cyberspace. It's the scarcest monetary thing that's ever existed. Unlike gold, you can't make any more of it. Like once we get to the 21 million, like what are your thoughts when you start to hear those things in regards to Bitcoin?
So I will say one of my former colleagues and the guy I do the Motley Fool Money podcast with, Andrew Page, is a massive Bitcoin fan. So I will say there was no lack of I was just going to lack of knowledge. It sounds stupid. I've heard and read plenty about it. I haven't read the Bitcoin Standard. Andrew has been very fulsome, both directly, independently with me, and on the podcast itself. And I say that because none of the things you just mentioned are new or unusual or surprising to me.
Yeah.
The challenge I've got is a fundamental one of, so therefore, what is it worth? And that comes down to a question of ongoing demand and sustained demand over time. Now, there's two ways to look at that. One is New York. The other might be, I don't want to pick a country or a city and be rude about it, but pick an unpopulated place in the middle of the desert in Australia, right? Cooper Pedy. Yeah. I could have bought New York, could have bought Cooper Pedy. I get very, very, very different outcomes from those two things. They're not making any more land in Cooper Pedy either. So we can look at New York and say, imagine that. I can look at Cooper Pedy, or I can look at somewhere else around the rest of the world and say, look at that. I could have bought all that sand for nothing, and it's still worth almost exactly nothing. And this is not me being critical, right? But this is not a case against Bitcoin at all. It is fundamentally, if I'm going to buy Bitcoin for the current price, which you have up on the screen, was 66 grand, whatever it was.
67.
I've got to believe that'll be worth at least that or more in future. Now, I have no issue with the scarcity question. I have no issue with the technology question at all. This is a really bad example, and it's a bad example for a lot of reasons. So analogies are always imperfect. There's only so many Picassos in the world, and yet Picassos aren't worth in total the market cap of gold. Now, you might say, well, because it can't be transmitted, it can't be secured. There's reasons why it shouldn't be. I absolutely get that. My point is, not everyone wants a Picasso or a piece of a Picasso. Not everyone's going to pay the same price for that piece of the Picasso. The art lovers are, but I'm not going to. You may or you may not. There is a point at which adoption will net out. Maybe it's 100%, maybe it's 50%, 20%, 10%. And there's also a point at which adoption can go backwards because it was exciting for a while when the price was going up, and then it stopped, and now I don't care anymore. And so what I'm pointing at is not a forecast, a prediction, a bear case at all. What I'm simply saying is, unless I know that, I have no ability. If I know Woolies are selling 10 cans of baked beans today, there's a very good chance next year they're selling 11 cans. A very good chance 12 cans the year after, right? Because that's just the way these things go. Guarantee? No. But probable? Yeah. Or if not baked beans, maybe they're selling toilet paper because they've got internal diversification. Again, bad analogy, but the same kind of thinking. So when I look
Let
at
me
Bitcoin,
just interject
please.
quickly.
Oh, yeah.
Say the bank bean, like you expect that it's most likely that they're going to buy another 10 next year from 10 to 11.
Yep.
Like I guess I have the same fundamental belief with Bitcoin. People are going to be drawn to a scarce monetary thing. So next year, people are going to buy, like 100 million Satoshis or they're going to keep adding to their stack because they understand it more and more and they're printing money. So is that not like sort of the same mindset?
A bit. It comes down to why you have that degree of faith, right? I think it's a case of why or for how long or how valuable will it be and at what point. And I just don't have enough reason to believe, not because others can't and not because others are wrong. Again, I want to be really clear. I'm on the fence. I'm not anti it. I'm just saying, in 5 years' time, let's say more people are. What's a good example? I mean, again, there's no perfect analogies, right? Let's say the dot-com boom in 1999. Shares went through the roof. None of those investment cases, almost every company that launched during the dot-com boom had a business model that fundamentally now in 2024, 25 years later, was proven. Pets.com was this online pet store retailer. Everyone laughed at it, went broke. Stupid, as if anyone's going to do that. And of course, pets online, pet food, pet care is now a massive, massive industry. They were all right. It didn't mean the price that was being paid for those shares at that point in time was appropriate. The thesis played out in 25 years. People are doing a thing. How much are they paying for pets.com? Still less than they were in 1999, even though the thesis was right, even though people are buying more stuff online, the business idea was right. Microsoft went to a price in 99. It didn't recover for 15 years after it crashed. So there is the fundamental idea of, is Bitcoin an attractive technology? Absolutely. Is it beautiful? Absolutely. Is it amazing? Yes. Does that necessarily mean it'll be adopted at scale? Question mark. If it is, how much will each Bitcoin be worth? Question mark. It's a fundamental unknown. And back to that kind of idea, why people are going to have more baked beans? Because they've eaten baked beans for 100 years. If it's not baked beans, it's going to be spaghetti. If it's not spaghetti, it's going to be, whatever. Woolies is probably going to sell it because they've got a place in the market. People need food. It's not an optional. It's not a question of, will I have food or this other new digital food? They're going to have the food. So it's not a negative anti-Bitcoin view. It's simply a case of, I don't know. In one version of the world, these are worth $1 million each in 10 years' time, 5 years' time, 2 years' time, whatever you want to say. In the other case of the world, they're still used, but everyone goes, it just turns out they're just exchangeable tokens, and I don't just store a lot of them because I'm just swapping them backwards and forwards, and its own heft becomes its own problem at some point, because if I can't afford them, I'm not going to buy them. So there are too many uncertainties in that adoption curve, and the price that adoption curve will imply. I don't think that we can say just because more lithium's another great example. Oil's even a better example. In 1920, 20s, 10s, was the first oil drill. Before they were using whale oil, right, and candle wax. Yeah. And we went from zero to millions of barrels a day over that period of time, and the price went up twofold, right? So it's airline travel went through the roof. Airlines all went broke. So I think there is adoption, question mark, and then there is what price does that adoption imply or create? I don't know. Yep. I literally just don't know. So for me, it's like, cool, maybe I'm missing out, maybe I'm not. I don't know. It's sitting on the shelf.
Interesting. I think, again, like the Bitcoin standard may add a little bit more context. I wish I had not Larry Fink, but Lawrence Lepard on with me this morning. But a question for you, Scott. Yeah. Do you think, not just Australia, but say like Australia and the rest of the world, America and stuff, are they going to continue to print and debase the currency like literally for the rest of our lives?
Probably, yeah. I suspect you're going to go to cash versus Bitcoin. I would say shares should be in that conversation as well, by the way. It's why I
was just bringing hard assets. Yeah.
Yeah, no, for sure. Well, it's why I don't own cash, right? So I don't hold cash. My solution to inflation is investing in shares. Personally, could be property, could be Bitcoin. So, would I want to store my wealth in cash for the next 40 years? Absolutely not, for exactly the reason you suggest. So, yes, I suspect they will continue to print money. I suspect, we know the central banks are targeting inflation. They are targeting erosion of our purchasing power as an economic tool. And I don't think that's actually for nefarious reasons. I think they believe that is the way that, as long as wages continue to increase, again, that's what I said, real purchasing power earlier in the chat. I think they believe that's true. Now, maybe I'm naive, maybe I'm optimistic, maybe I'm giving it too much credit. I don't think it's the fairest. I think they're doing it because they believe it's the best way to create prosperity, because it creates those economic activities which improve our standard of living. So, sorry, it's not a direct answer. Do I think they will? Yes, probably. Even if they don't massively, fractional reserve banking probably does the job anyway. So I should show that back. Money printing, probably, but not definitely. But growth in money supply, yes, probably, almost certainly, because that's the way we run our financial lives. I wouldn't want to hold cash. No, you're absolutely right, mate. There's no $100 under the mattress or in the ground is a terrible, terrible, terrible thing to do. And that's why I said cash for 2 years, but shares for anything more than that. In fact, I should be very clear. I would actually hold cash up to 5 years as financial advice, not as asset prediction, because of that requirement for a fixed amount of money at that time. But 5+, I said on that tweet that you kind of responded to originally, 2 years cash, 5, 10, and 20 years shares. And for exactly the reasons you've talked about, it gives you a protection against inflation. It's going to grow in real and nominal terms. And I think it is the demonstrated output of capitalism, democratic capitalism. So that'd be my solution, or personal solution. It doesn't solve money printing, doesn't solve fractional reserve banking. It's my personal strategy to maximize my wealth in that environment.
Yeah, I actually agree with you quite a lot, and I can see in the comments there, like I did ask everyone yesterday, to be nice. It's the audience. Yeah, no, it's good. And the audience, I reckon, is a split between maybe say 70% of people understand Bitcoin to a really high level and see it as a separation of money from state. It is something parallel to the existing broken money system. And then the other 30%, and both are right, is it is number go up technology because of things like money printing, but they're in here just to be able to protect their purchasing power or to be able to get rich quick or whatever. And I definitely say, like, if you are coming in for at least a 4-year time frame. Over a 4-year time frame, Bitcoin's done nothing less than a double. History doesn't always repeat, like by any standard. Often it rhymes. But then when you have like the world's hardest scarcity form of money that has had like the most growth, and you've got people like Larry Fink, Michael Saylor, you've got countries adopting it like El Salvador does, pushing back against the IMF, being able to pay off their debts against the IMF, really changing people's financial privilege. That's also a benefit of Bitcoin as well. And then I guess we both agree they are going to print money, or the money supply is going to grow. So there's going to be more out there. It's going to go into hard assets. I believe because Bitcoin's the hardest monetary asset that's ever existed, it's going to suck up more. But that's, I guess, faith from my level of research that I've gone down for the last 5.5 years. And I think, yourself, if you spend time reading the Bitcoin Stand, you'll either be like, nah, it's not for me. I'm going to stick with shares. This is what I know. You'd be like, maybe this is a little bit interesting. That 40% per year compounded annual growth rate seems a little bit interesting. And then maybe the Motley Fool starts sharing it. But hopefully this conversation has made you want to dive into it a bit more, because I think it's nothing short of beneficial for everyone. It's a force for good. Bitcoin maximalists can be very trolly, can be...
Oh, I know.
Everyone said... Like I said yesterday, be nice, and people like Bitcoin maximalists are always nice. I'm like, that's the furthest thing from the truth. Bitcoin maximalists absolutely care for people. We've got a lot of empathy, and we hate it that people struggle, that the government print money, that inflation is hurting everyone. We've got a cost of living crisis, which leads to a housing crisis, which leads to a mental health crisis. Everyone's going to go through a mental health event some stage in their life. The biggest leader or factor with that is usually around money. That's what causes the most division in the household. So when the money is broken, we can see what the problem is, clearly understand Bitcoin is the solution or one tool to have in your tool belt for it. So no, we're not nice, and we may not say the nicest words, but 100% we do care, and we're just after a better world. So I guess that's why they're so relentless. But in regards to being nice, definitely doesn't happen. I'll just browse through and see if there's any comments, but I'll bring you up full screen, Scott. And if you just want to I share a message of anything, like where you think the economy is going, where people should focus, because I'm so hyper-focused on Bitcoin, which is great, but you're focused more on the wider economy. We've got the US presidential election, actually. Do you want to dive into what you think is going to happen with that? Yeah. Trump looks like he's leading a lot, but anything could happen. They're talking about monkeypox here in Australia. Now the scandemic, in my opinion, we've been talking about that for the last 13 months, literally monkeypox. I thought it'd come out in September, October. We start to hear rumors. Around the time of the election, there could be a lot of volatility coming to the market, but I think you probably know a little bit more than me, so I'll pass it over.
Yeah. So messages in the US election. I'm really disappointed with the US politics right now. Politics is always disappointing, but policy broadly. We mentioned tariffs. You didn't ask me about price caps, for example, which Kamala Harris is suggesting. Also taxing unrealized capital gains. They're both just stupid policies. And so you've kind of got this weird scenario where the kind of fracturing of politics is dragging people to the extremes. I'm not going to use labels and call people names, but I will say that you've got a very meaningful hollowing out of the center of political life. And I think that's really bad for all of us, because you end up polarizing the conversation. We don't come together to fix problems. We argue that mine's better than yours is better. At the moment, neither is particularly good. If Trump wins, they get tariffs. That's a terrible idea, and we know what happens with tariffs. If we have with price caps and taxing unrealized capital gains, we know what happens there. It's just a mess. It's an absolute mess. What I would say, I think is really important is, despite all that, two thoughts. Despite all that, the first thing really is we get through this stuff. And I kind of mentioned that before with the banking thing. Democratic capitalism is a force for good. It really, really is. Despite all the crappy stuff, right? Is the money broken? Yeah. Are the policies dodgy sometimes? Yeah. Are there too many millionaires and billionaires and ordinary people getting screwed? Yeah. And yet, you'd rather be poor today than rich 200 years ago, which is not an excuse for people being poor, and we should fix the problems, right? But I want to also keep that perspective. Things get better over time. They just do. Why? Because we want to make them better. Some of us for altruistic reasons, some of us because we want to make money doing it. The iPhone, think about it, and the internet in your pocket. Where's my phone? Certainly somewhere. There it is. The internet in your pocket, right? I mean, that came from a military piece of work. Steve Jobs thinking we could tap on some glass instead of a keyboard. Wi-Fi getting invented in part by CSIRO, and all of a sudden you got this, right? Bitcoin doesn't exist without the technology that it runs on. So the improvement in life continues over time, and I think that's really, really, really important. Fix the problems. Don't put your head in the sand. Let's demand better solutions from our elected representatives. Let's make sure we treat each other fairly and appropriately. I'm a finance guy. I want to make money. I want our members to make money, but I'd much rather have a healthy, cohesive society. But be positive, be optimistic. Expect things will improve. Why? Because they have for the last 40,000 years. They're not going to stop anytime soon, in my view. We just got to make sure we hold our leaders to account and act ourselves in an appropriate way.
Yeah, I definitely agree. We need to hold the leaders to account. We very often push back against misinformation, disinformation bill, just some of their reckless policies they're putting through that don't seem to be in their best interest. But I truly believe, like you do, Scott, over time I've got the saying, how does it get any better and what else is possible? Like, it may not get better straight away. That's just the nature of life, but everything will get better eventually. And if it's not good, it's not the end. I've just started a couple of random comments that I'll bring up. Awesome. Banks as they operate today are the biggest Ponzi scheme the world has ever seen. Definitely agree with that. And I guess that ties into them not being safe. They keep going down. But like, for yourself, you're outpacing purchasing power. But what happens, like, all fiat dollars, I think I've got one here. Greg was saying, so Voltaire, a famous French philosopher circa 1720, all fiat eventually always returns to its intrinsic value, which is zero. Every fiat currency, it's got like a shelf life of roughly about 100 years. We're roughly at about 100 years now with the US dollar. like, what are your thoughts about that? Does it just go into hyperinflation? We've already seen in many places around the world, Venezuela, Lebanon, Egypt, the Greek banking crisis and stuff. Does that not scare you that, like, everything's denominated in fiat and like on a fiat society where Bitcoin is... still people need to believe that it has value, but it's got intrinsic scarcity where, like, fiat currency, which we're measuring wealth and generally, they just make it up. It's literally monopoly money. They just have a license to counterfeit it.
I think the losers are the people who hold cash. And I mean cash, not other non-Bitcoin assets. And I think that's where it's a little bit different, right? So, I mean, Bitcoin's not worth anything either, neither is fiat in any sense other than what you and I are prepared to exchange it for when it comes to goods, services, and labor. So my dollar, I can't remember what it was, my $5 is worth 15 minutes of my time or a couple of cans of Coke, right? So that denominates what I'm exchanging. Now, over time, you're right, that candle burns down. But in the moment, you're right. There is no intrinsic value for fiat. There's no intrinsic value for Bitcoin either, in my view, because we're just simply denominating a purchasing power amount as a medium of exchange or a store of value, depending which we look at it, between those two things. So, from my perspective, you're right. I wouldn't want to have $1 million in cash in the bank for all the money in the world. Now, if I get interest on it, maybe I hold my purchasing power because that bit's still there. And so that's where what are we trying to measure? If my wage increases at 4%, inflation is 3%. I'm completely fine. It doesn't matter. It actually doesn't matter what the fee. You can put a 0 on or take a 0 off my bank account. As long as you take a 0 on or off the wage I earn and the price I pay for bread and milk and everything else. And it is literally just a representation that I can exchange labor for goods in a way that doesn't require me to do it at the very point of providing that labor and consuming the good. Now, the longer you hold it for, which is I think where some of your viewers are getting at, that's potentially an issue. And this is where I probably think, and I need to be careful about this because I don't think the price of Bitcoin settled yet to a likely intrinsic value, if that makes sense.
No, it's way below.
Well, whatever it is, right? Gold has been around for 200 years or 2,000 years. It's going to be roughly that sort of value, right? So it's kind of it's not going to halve or double anytime soon, yeah? Because we've kind of been through that. The market's worked out, or society's worked out what gold's roughly worth. I think at some point when Bitcoin's price stabilizes, and maybe it's 100-fold higher or 10% lower, I don't care, whatever the number is. I think it's a better asset than gold. I don't know it's a better investment than gold yet because the price is still, I think we're still finding, what do they call it? Price discovery. I think we're still working out what Bitcoin's actually fundamentally going to exchange for. But I think Larry Fink is probably right. At a point in time, maybe we're past it, maybe it's coming, maybe it's right now. Bitcoin's a better asset than gold for all the reasons you guys have talked about. And again, this is why it's not a misunderstanding of the technology or a lack of understanding of the technology. For me, it's pure adoption and valuation. That's the thing that I'm stuck on. Not because I don't understand what it does. I don't understand as well as you or your viewers. Not because I don't understand it, because I've got to say, okay, and then it's now therefore worth X, like a Picasso or a whatever. What's a Picasso really worth? Well, there's only one of them. Therefore, it could be worth all the money in the world. Well, it's not. Why isn't it worth all the money in the world? There's only one of them. It's scarce. Well, because of X, Y, Z. And so that conversation of what's it worth is a really open question. So relative to holding cash long term, I think that's terrible. It'll be eroded away. It's absolutely true. Is it eventually worth 0? I guess mathematically you extend your graph out long enough with purchasing power, and a dollar now in 485 years' time is worth $0.01. So, okay, that's kind of shit. Excuse my language. At that point, sure. But as a medium of exchange, I think it's a very, very different story. So there's kind of two different things. And then as cash is holding, I agree. I've said before, it is being eroded away. That's why I own productive assets rather than cash for the long term, for all those reasons and more that you've talked about. So I think there's a bit of a middle ground in between those 2 points. And it depends on what the function of the cash is versus the function of another asset that has either scarcity value or productive growth or something else that makes it worth more over time.
Yeah, no, I like that answer. And we've got Lurker here saying Scott's not the right guy. We're all institutionalized by fiat money. It's the process waking up. He will walk his own path. Completely agree. It's everyone does get Bitcoin at the price they deserve. And it's just the amount of study. I reckon it takes 100 hours before people start to get it, and focused hours. You can definitely accelerate that. But then GD, the only reason Woolworths shares are worth more over time is because of debt growing over time. More stores can be built, more baked beans can be created. However, more Bitcoin cannot be created. I'd also chuck in there is a real cost that goes into creating Bitcoin, which is the energy and the mining and the proof of work, which gives it value as well. So it's not, so it does have intrinsic value through those energy costs as well, sort of inherently baked in. But Scott,
GD quickly, mate. For GD quickly, the difference actually productivity is the other answer that we don't. You need to include in that conversation, right? So go back to a pre-significant amounts of debt being created world, and you actually do get improvements in standard of living over time that weren't debt related. They come down to productivity related, largely invention, largely the use of technology, but productivity more broadly is also where a lot of value is created. So debt is absolutely part of that, GD. You're 100% right, but it's not the whole story. And that's why I think, I will say if I can say politely, I think it's worth, I know Bitcoin is the answer for a lot of stuff, and I don't necessarily disagree technologically, but I think stepping outside that, there are other forces at play which aren't just being described by the broken money system. I think that's worth just incorporating in the thinking as well as, not instead of, but as well as some of that stuff you guys are talking about.
Yeah, I like that. And when it comes down to investing or saving, I don't even think Bitcoin's an investment personally. I just think it's a store of value. It's a savings technology, and this is sort of where the riff came from is I'm not here for 2 years. I'm here for the separation of money and state. It's something that's just more fair, more equitable, and it just works better. But I think this conversation, like we have gone into a couple of nuances, and I guess just thinking about things differently because we don't know what we don't know. Like the Australian market a whole lot better than I do. What's going on geopolitically? And short term, we have no idea what could happen. They may come out with another pandemic style event, or something could happen around the elections and throw the world into chaos. The black swans, are called black swans for a reason. Like we can't really expect them coming. But they do come, and they come often enough, and it's just to be prepared and then have that longer time frame. I'd just like to ask everyone watching, if you haven't already, we've got 300 viewers. If you can hit the like button, it will get Scott's message out there. It will get my Bitcoin message out there. It'll share Bitcoin content. We are at like $67,000. I believe they're going to print a lot of money, which is going to go into assets, stocks, property, gold. Bitcoin is going to suck up the most over the time period. I think just probably sooner rather than later. But like Scott and I are both saying, they're going to devalue the dollar probably perpetually for the rest of our days. So maybe it makes sense to be getting away from cash at the end of the day if it's longer than a 2-year time frame. And if you can hit the subscribe button, if we do give you the news 5 days a week and then podcast open conversations like this. But Scott, I'm going to pass it over to you, and if you can round us out, leave the audience with a message. And I just want to say to everyone, have a very beautiful day. But over to you, Scott.
That's awesome, Sean. Thank you, mate. Firstly, thanks for being so open and taking the time. I know Bitcoin holders and believers are super passionate, and you're right about some of the grief I've got on social media from time to time. But you've been really, really thoughtful and kind and open to the conversation. I think that's how we all learn, right? I think when we start to shut people down, when we start to pretend we have the only answers, we actually push people away rather than drawing them in. And I think sometimes that's worth doing in life as well as in finance. I think that's really, really important. I do want to, Matt, I probably said it already, but I want to leave people with a sense of optimism in whatever form. I don't want people. Here's me proselytizing. I don't want people to buy Bitcoin because I think the world's going to go to hell. I mean, maybe it does. And if it does, that's going to suck for all of us. And frankly, if the world goes to hell and you want some Bitcoin, it's still going to hell. So we've got to hope it's not going to. And I guess I'd just separate the two out. Let's deal with the problems. Bitcoin will be, if it's going to be great, it'll be great no matter what, right? If the world's great, Bitcoin will be greater. If the world's terrible, Bitcoin will still be great, although the world will suck. So I know which world I'd rather live in. So just be optimistic. Look for solutions. Look for better outcomes. Be part of those solutions. I mean, we can check out and kind of whatever. I've been to countries where you live in gated compounds, and the richest bloke in those countries still, security guards at the door. We can't leave the house. We want to be careful what we wish for. So let's make the world a better place. It's very, very, very live aid of me. But be optimistic, be positive, be part of a positive change. If that includes Bitcoin, fantastic. But the broader picture is I'd rather be slightly wealthy in a very, very good world and country rather than very, very rich when the rest of the world's gone to hell.
Yeah, I absolutely agree. Scott, it's been a pleasure. For everyone watching, please do something nice for yourself today. Do something nice for somebody else out there. Have a beautiful day. Be blessed. Thank you, Scott. A quick message about today's sponsor, the Bitcoin Way. If you still have your Bitcoin on an exchange or you're using a hardware wallet that's not air gapped, it's not open source,